Hi everybody and welcome to the Magnate Property Podcast. My name is Keith Egan, Managing Director at Magnate Assets, and in this episode we're focusing on the UK region that's generating serious interest from international investors, the northeast of England. Known for its affordability, strong rental returns and real capital growth potential, the northeast is fast becoming a go-to destination for investors from the Middle East looking to diversify into UK property. Joining me today is someone with deep experience in this space. It's Jackie Fitzgerald, co-founder and CEO of Homes or Houses. Jackie brings over 30 years of experience in investment and financial services, and crucially, she spent 13 years living in the Middle East. So she understands firsthand the challenges that many expats and overseas investors face when buying UK property from abroad. So since founding Homes or Houses in 2012, Jackie and her team have helped clients successfully purchase, refurbish and manage more than £50 million worth of UK property, and that's all within the North East region. In today's episode, we'll explore what makes this region so attractive, what investors need to know before entering the market, and how to build an hands-off property portfolio from overseas with the right local partners. So today, Jackie, welcome.
Thank you. Absolute pleasure to be here.
So to get started, do you want to cover a little bit about your story and what's got you here, and a little bit more detail about how you from the northeast, from the Middle East to the northeast, really, isn't it?
Yes, and back again.
Yes,
back again. Yes, I'm born and bred in the northeast. Although I've spent the majority of my working life in various locations around the UK, and then significant period in the Middle East, in Bahrain, in Dubai, in Abu Dhabi, and that is probably one of the most significant parts of my career because it taught me so much culturally, business-wise, etc., and what it is truly like to live at a distance. During my time there, because I am naturally cautious by nature, but I was working in Middle Eastern equities, I was investing in UK property. And
so you were investing in UK property from there?
From there, yes.
Okay, so this is where the idea and everything
This is where the idea came from.
Great, yeah.
So investing in UK property from a distance, although my background prior to going to the Middle East was in banking with major banks, and I had experience in financial services, I had experience of mortgages, I was now continuing to be in banking. So I, above anyone, should have really understood what the challenges were going to be, whether that was anti-money laundering regulations, whether it was proof of ID, notarization of documents, etc. But I still went straight on in as though it was going to be simple, and it wasn't.
It wasn't.
It wasn't.
So who you were buying for? You were buying for yourself
I was
at
buying
that
for
point
me.
and building your own
Yeah.
portfolio, and that was in the northeast.
That's
as well.
right. So the northeast was an area I knew, and it was the easiest area for me to access. I was building a portfolio on an absolutely non-commercial basis. Friends and family, you can live there, look after the asset, but I wasn't really doing it in the commercial. It was for a long-term plan. So it was typically, as an expat, looking to purchase an asset which I could hold in the long term, receive an income from in the meantime, and then have something for a pension fund. But the challenges I faced led to the identification that a solicitor might want to see me with my passport, which is difficult when he's in Durham and I'm in Abu Dhabi. That I would have face problems with banks who go through happy days and sad days with regards to their lending to expats. So I experienced all of this, controlling contractors, finding a reasonable property manager. You say it, I felt it.
So this is where the experience came from.
Yeah, the experience was real, and the idea. The idea actually came after the markets corrected, and we went through the awful crash of 2008 and 2009, and a lot of my colleagues started asking me then, what was I doing with property? Because when it came to my own personal investments, I was definitely looking like the coolest one in the office because I wasn't concerned. And because I had a long-term intention, what was happening over this, what turned out to be a long short term, but over that 2-year period didn't unduly concern me, because property in houses are something that's a necessity. We're suddenly not going to have a need for houses. So I wasn't that concerned. And that was when they started to ask me, well, next time you're home on leave, can you find me something? And then they were fascinated because a whole house for 100,000 or a room share, a whole house with a tenant in it paying an 8% return, or a room share. What are we talking about? So I found myself educating people there. And I thought, there's something in the region of 5.9 million expats around the world from the UK. And
That's true.
Quite a lot of those will want to have a footprint of some form in the UK. And, maybe buy a house to return to, or buy a house as investment. A lot of expatriates are accidental landlords. They inherit property, or they leave their home behind, and then they change as an expat and they don't want to go back to it. So there's lots of people who've got property already, but lots of people who want to enter the market. And that's where the idea for Homes or Houses came from.
So you were back in the UK 2012.
2012 I came back.
Came from.
Yeah.
And we were talking a few days ago about Northeast and the UK. We do various podcasts and get people's opinion from different regions of the UK and so on.
Yeah.
So I recently saw 2 reports, and it kind of made me think a little bit about this. The first report was showing capital appreciation by regions in the UK since 2008, which I think was a financial crash.
Yeah.
And the last 17 years. And it surprised me of what was number one. And number one in that, as I said to you the other day, was London, with about
That doesn't surprise me. Yeah.
20 plus capital appreciation over that period of time. And the next region behind that was about 80%. There was a clear gap between London and the rest.
Yeah.
And the lowest region was the Northeast.
Yes.
In that period of time. And I'm thinking, okay, that's surprising for me in terms of London being at top and there.
Yeah.
And then the next report, you see capital appreciation for the last few years. And the region that's running away with it is the Northeast, which is over 14% over a short period of time. So it's kind of like, I'm sat there going, okay, something must be going on in the Northeast.
Yeah.
What is it that's going on in the Northeast then, you find, Jackie, from that point of view?
Data comes from all sorts of different places, and data can be really swayed by the opinion of the person producing the data and what they're hoping to find. Now, I don't know what the source of that data was, but what I'm delighted with is the fact that it reflects exactly what I've seen. Exactly what I've seen. Now, I knew from my history in the Northeast, in my personal investing, that there are 2 types of investment in the Northeast. One is straight off the market, advertised on Rightmove, owner-occupied house, etc., buy-to-let, standard property, which we've never ever thought was going to be a capital gain play. And in fact, we've always told our clients, this is a yield generating region. We are a yield play. So as far as capital gains versus yield, people are always tending to look for that perfect combination. But we were at the extreme. So you would play for your capital gain in London and you would play for your yield in the Northeast, because the comparison between the two is like chalk and cheese. So the yield would be very low in London, whereas the yield would be...
What's the comparison then you find between the two, would you say?
I would, it varies. Oh no,
Oh.
it's 4 times as much in the
yield.
Northeast. Yeah, so can I give you an example? An example would be one of our early clients in 2013 came to me because he was about to buy a 3-bedroom terraced house in Fulham. And he was about to pay £800,000 for that property. And he spoke to me after being referred by someone. He lived out in Australia, so he couldn't get here and look for himself, and he just asked my opinion. And my opinion was very much, what do you want from this property? Are you looking for capital gain, or are you looking for income? And he said, well, I'm looking for income primarily. Now, the income he was going to achieve on that property was around £2,500 a month rent. It was a 3-bedroom terraced house, which is really good rent. But then when you compare that to his capital purchase price at 800,000, that's a really low yield. And I actually explained to him, if he was looking for income, he could actually come to the Northeast. He could buy, and this is a live case, he could buy 8 £100,000 brand new build houses, 2-bedroom starter homes, which would generate him around £700 a month rent each. And from that, he would 8 by 7, he'd be doubling the rental return. And he also then was building a portfolio which, for tax efficiency with regards to capital gains, he could be selling a property per annum or 2 properties per annum to exit. So one of our other we're very keen on understanding the exit as we're going in the entry. We wouldn't go in a cinema without knowing where the fire exit was. So we're always keen when we're looking at properties to see who would you sell this to in the future? How would you dispose of this asset? Because you don't want to be stuck with something that you can't sell. But the difference between yield and capital gain in that situation was very, very apparent. But when we look at the story of how things have progressed in the last 13 years, for example, from 2012, that last 3 or 4 year period, I can feel it. I can feel that difference with regards to the capital gain. I can feel the difference with regards to the shortage and the demand on housing. I can feel that with what is happening around us, it's palpable. And there's been a significant number of changes in the Northeast, which have happened starting in a relatively quiet way in 2016 to 2019, but then getting very loud from 2021, when PIF, the Saudi Arabian Sovereign Wealth Fund, purchased Newcastle United. There has been a trigger response with various sovereign wealth funds, 2 of whom are already in the region following Saudi, with asset managers coming and investing. So large names, Blackstone, for example, are creating a $10 billion data AI centre in the Northeast. HMRC have moved to the centre of Newcastle, and the Treasury's moved to Darlington, also in the Northeast. You've got all sorts of major investments. GIC, the Singaporean Sovereign Wealth Fund, have arrived in 2021 and purchased UK Land Estates, which is a full northeastern portfolio of industrial and retail land, equivalent to around 3.5 million square foot of land they've purchased. 20,000 jobs on one industrial estate alone, the Team Valley Trading Estate, the largest estate in Europe. So that data that you're referring to reflects actually what's happening here
now
at
so
this
you
moment.
Think this jump of capital appreciation is
It's reflecting what's happening in the economy.
So if I was to say to you, I think that to take what you've just said is that the Northeast, really what makes it kind of unique at the moment is, I was trying to put this into what I know in terms of this, is that there's very good yields, because currently at the moment the house price is, 100,000 with £700 a month rent is, everyone can work out you've got
I think now that rent
on,
now would be around 850 pounds
and then
per month.
and then basically your older houses, and you can get less value. I know we were talking over the last couple of weeks, and there's 1 bedroom apartments at 55,000, and so there's quite a lot of range of property there. So the yield makes it different.
Yes.
And what we're saying now as well, what's coming on the back of that, and I think we've seen that in other regions. So we've seen that in Manchester, and I think currently as well as Liverpool and some of the regions, that when that investment comes,
that makes the difference.
Make the difference, because people will sit there and say Manchester's got Media City, and then we've got this and we've got that, and this investment. And now I hear this with Newcastle, we've got data centre, we've got HMRC, we've got this. So I think it's probably on the early cycle.
It is on the very early cycle, and I think it's a very start of the cycle. And for an example, when Nissan was encouraged, for want of a better word, to come to the Northeast in Sunderland and promised 120 jobs to the region, and now has 6,500 staff, produces all of the Nissan Micros for the globe, and is just committed to investing another 2 billion in the region and building a second electric battery factory. And these sort of collaborations, and it's not all government funded. That's what's really interesting me, is that there are a couple of government funded. So Sunderland has gone through a major regeneration, and the largest film studio in Europe is about to be built there. That is primarily backed by the government. Devolution has been encouraged by the government. New Lord Mayor Kim McGuinness is being encouraged by the government. We now have the Northeast Combined Authority. So we're right at that point. People think back to 10 years ago, what was happening in the Northwest is now we're starting to feel that happening here.
I think you can, like the Northwest, people talk about the good old days, and we've got partners that we work with for Manchester, and we work with the marketing departments. They're going, You know, Keith, I remember the days when we were paying 85,000, 90,000 for a one bed in Manchester that are now 274,000. That's 10 years later. And you see Liverpool is probably approaching now, probably getting up to the 200,000 mark, maybe 160 and above. And then, you know, I think the North East is average house prices even less.
174, 174. And
it's more room, I think.
There's a lot more room. And I think the room comes... You can find the room, but the Northeast is a region that is street by street, very similar to Liverpool, Manchester, you know, and you go Bury and Bolton and all of those places. The Northeast, stretching from North Yorkshire all the way to the border with Scotland, is a vast area. And not all of our land is ripe for development. We've got a lot of hilly areas over here. You know, so if you think about how Cumbria merges into the Northumberland, you know, we have a lot of areas that we couldn't build on. So it's not just a case of let's stretch everything out and you know, we just keep on building and keep on building. So we have huge development opportunity, but we're not going to develop ridiculously so. So I think we're always going to have that little bit of an edge of our demand is high and our supply is never going to stretch out. But I think we're at that point now where we're really just starting to move now.
I think that's a couple of things that I've read recently. You made a good point earlier about data can sometimes reflect what
what you want to see. Yeah.
What it can be, yes.
Yeah.
You know, never let the truth get in the way of a good story.
Yeah.
But I think a couple of things that really drive it is demand and supply, which is completely imbalanced in the UK.
Yeah.
You know, this current government are looking at trying to build 1.5 million homes. They've just announced a whole, I think, extra few billion a year for social housing, affordable housing. But also as well, when you look at some of the other stats, what drives the house prices when you have a shortage is people's income. And actually wages are increasing in the Northeast. So you've got like the affordability is, so when the affordability improves, and by that means, you know, like property prices is X times the average salary. Once that gets, you know, starts dropping below 5 and 4, prices will go up because people can pay more.
And that's where we are at the moment.
Yeah.
That's where we are. We're at about a 4 times multiple of earnings. And that's where you don't get the extremes that you get in the Southeast, because they've way surpassed that. You know, they're in the unaffordable bracket now. I think you mentioned something with regards to London itself, and you know, we have the north-south divide, and that divide it's a bit like the curtain on an airplane flight between business class and economy. It moves depending on how many seats they've sold, so it moves depending on who you're talking to. You know, I've spoken to a lot of people in London who think the north is past Watford, and then you've got people who think the north is actually Leeds.
I get people arguing with me saying Manchester, where I'm from, is not north because Newcastle's north.
Yes,
Manchester's in the Midlands.
It is, and it's. I would say Manchester is definitively the northwest. In truth, Cumbria is the northwest, but it is Manchester and Liverpool, etc. I class as the northwest. I class Birmingham's, etc. as the East Midlands, and then you have the other Midlands, and all sort of things get mixed up. But the northeast is definitive, and the northeast is very much where North Yorkshire ends, the northeast begins, and where Scotland starts, the northeast finishes. So it's very clear cut, but it's still underexposed to investors. It's got a very densely populated area. There's a lot of development. You know, we have the largest wind farm. We have SmithKline Welcome. We have all of those chemical factories. We're very keen on green energy, and there's a lot happening within the region that would take me far too long here. I would just be saying, okay, here we go. This is what's happening. So yeah, there's a lot of opportunity for income to increase if people start coming to the northeast to work. And I think the HMRC and the Treasury are the first indicators. But when you start seeing what's happening around the football ground, the development of Newcastle, Sunderland, you know, the whole development around the medical training.
There's some rumours about Sunderland as well, isn't there?
Oh, there are. Oh, there are, but you're not going to hear that here. Yeah.
So, okay, so we've got the background in terms of that. So in case then of, like we said at the beginning of the podcast, we'll look at how the vehicles in which you can do or how you can invest within property within the North East. So there's different vehicles that are there. So I think previously when we've got the work that you do. And I think I just want to explain this. You are in fact able to source properties and manage and help the refurb for that. But there are other opportunities as well.
There are
for people that do.
I think,
you want to explain that kind of?
Yeah, absolutely. Our business, our business is a sourcing, refurbishment and management company. And that gives investors the confidence that we won't source something for you that we're not prepared to manage, because the fun begins in the management, okay, with regards to the tenant type, etc., and the management and all of the regulations that go around that. And there's been a change between 2008 and 2015. There was an increase in let's call them as they call them in the press, buy-to-let landlords, increased by 75% across the UK, across England. So there was a huge number of people, no doubt injured in the crash, who suddenly decided property was a much safer investment and direct ownership was the way to go. So we had 75% increase in the number of landlords. Between 2015 and 2016, and 2024, that number has only grown by 3%. And again, that's data. And can we understand that? And yes, we can understand it, because from 2008 to 2015, there were no changes at all in landlord regulation or tax treatment or certification or compliance. Zero. So, and we were there living it. It was an easy time between 2012, when we started, and 2015. In 2015, the HMRC decided that expatriates were now liable for capital gains tax. But what you were allowed to do was rebase the value of your property to April 2015. And then when you sold the property in the future, you only went back to that date to calculate the gain. So as an example of how hands-on we are, we asked all of our clients who had owned their property for over 2 years to consider having their properties rebase valued at that point, and we would hold them on file. And this is possibly going to sound unbelievable, but just this morning we had an email from a client who's selling a property. Did we still have his rebase value on file? And we did. Okay, so shout out if you're listening and you know who you are, but that's how important it is, because he'd owned that property for quite a few years beforehand. So it was important that he didn't pay tax when not necessary. But from 2015 all the way through to now, there have been 14 changes in regulations. That can be new certification, new compliance, mortgage interest rate relief taken away, selective licensing, ship inspections, you name it, we've got it. We've got the fees, we've got the heartache, we've got the threats of fines and people, and a lot of landlords are tired, in the last few years.
So you're taking all that risk away.
So we take all of that strain off them by making sure they're fully informed well in advance. As soon as it's announced, we're telling you, in 18 months' time, they're going to ask you to do this. In a year's time, they're going to ask you to do that. And we have had 24 hours notice on one change, and that was October the 31st last year, when the government announced we're adding another 2% to buy-to-let landlord stamp duty, and said by midnight tomorrow. That's the worst it's ever been, because that can cause chaos. But the other option available to landlords is that you can invest through a fund, and you can invest through a fund which will give you diversification across development finance, commercial property and residential property, but specialist and focused on here on the northeast. So there are two options: either direct ownership, and you accept all of the compliance, the responsibilities of the regulations, but you also get to select your own property, you get to feel the bricks and mortar, you get to say what the tenant type is, etc. And some people prefer to do that. Or you invest into a fund where choosing the tenant and choosing the property isn't your decision, but worrying about the compliance and the regulations isn't your problem either. And you're looking at a relatively similar return through both means. So that really comes down to an investment choice, and we can help clients decide which is the most appropriate way for them to go.
So if you do, so basically, I think I want to get a point here, because there are a lot of people offering, I've known this from experience, offering like high yield investments and things like that. And I can explain what I kind of come to the conclusion of. So from your model, somebody comes to you and says, Jackie, I want to start building a portfolio. Can you find me some properties? And there are different things you can do. So you'll go, yeah, we can find it. We can refurb it. We can manage it. We can find you the tenants. And those tenants can be
two types.
Few types of that. And we'll come on to that in a minute because I think that's important. But then you are acting on behalf of them and you charge a fee for your services, which I think is the best way that people can do it. And why do I explain that? Because some of the other high yield investment and sources I see will sell you the property and they're making their money from the property, which basically means their profits are in the property and whether you're getting a good value or a property that can do it. And
really
most of them
point.
tends to be not mortgaged. But from your point of view, you're actually able to get below market value. And just people are paying you the service to manage all of that.
It's a really good point because one of the points that, going through my own experience, one of the things that I recognised at that point was that the UK or the English property market is very, very vendor centric. So every estate agent you speak to is acting on behalf of their client, the vendor, and they have the vendor's interests at heart. And they want to sell the property.
That's a conversation I have many, many times when people are saying to me, I don't want to pay anything. And I'm saying, but you understand this person is working for the seller. They're not working for you.
Yes.
And some people want to find, like, I'm trying to find this house in London and I've got people who can source and they'll charge a fee. And I go, why am I paying a fee? Because he's acting on your behalf. They've got access to properties you won't get access to. And that agent is only interested in selling
that property.
So
you have the vendor, you have estate agents acting on behalf of vendors, and for developers, they're acting on behalf of the stock that they can make their profit once they sell their stock. So you can look at it both ways. But the most important thing, when I set up homes or houses, I had to explain to an estate agent what sourcing agent meant because everybody thought it was wrong. Everybody had never come across it before. We've been registered for anti-money laundering since 2012. We've done all of the compliance. We're registered for GDPR. We're registered as a true company who's acting on behalf of clients, should be. But the additional part of sourcing is not just finding a property, but using our network and knowing which developers are likely to offer you property, knowing which new build developers are likely to offer you a 20% discount from the market price, knowing which auction house will let you see the properties before they go live in the auction, speaking to the estate agent and saying, what are you viewing this week? And you see it before it goes on the market. It's that kind of access that you can't get unless you are doing this every day, every week, every month, every year, and keep on going and make a name in the market. So I had a call from an estate agent last Thursday, and I have sent her a bottle of wine because it's the first time it's happened in 13 years. She called me and said, I've had a call from a lady in Malaysia interested in one of our houses and she wants advice on the house. And I've told her I can't give her advice because I'm acting on behalf of the vendor. But I suggested she talk to you. So can you call her? Now, that is the first time ever that estate agents are now starting to become familiar with what a sourcing agent is, in truth. And that is the opposite of an estate agent, because we're acting on behalf. And what we do is with all of our clients, we act right up to the point of making the decision on the offer. We do the due diligence, we do all of the title checks, we do everything to make sure that that property is what it claims it is. So it's a lot more detailed than picking a link off Rightmove and saying, I like this one, do you? So there's a lot more to it.
And I think we can talk about this. You've kind of got a vote of confidence recently because we spoke just before about the option of investing through a fund.
Yes.
And Homes or Houses are working with
a new fund which will focus on the Northeast, where I will be the residential asset manager.
So they basically want you involved in this because of the experience and obviously the knowledge and everything.
I think, yeah, definitely. I'm not going to say this is why they want me involved. I would say that, yes, my knowledge of the Northeast, and it's a very deep knowledge of the Northeast, my understanding of the different types of property opportunities which are available, the difference between buying a property in Jesmond and buying a property in Sunderland. You know, there's so many different comparisons you could make because there's so many different places that you can invest. But I think that knowledge is crucial. The diversification of that knowledge, understanding that there are opportunities in the market which are not what the data says should be there, but they are there. Understanding how to treat a probate case, understanding how to deal with a deceased estate, all of that kind of thing. But also understanding the other side, which has come over years and years of managing property. You know, we went from no properties to 700 properties in a very, very short space of time with clients all over the globe. And along with that came 700 tenants of every type, shape, form and description you could ever hope for. And within that, there was a percentage of tenants who had needs that really we weren't skilled or qualified to deal with, which then led me into contacting agencies who were capable of dealing with the needs that they had. It's not that I didn't want them in the properties. It wasn't that I wanted them to leave for any reason, but I couldn't help them with some situations, whether it was bereavement, mental health issues, divorce, financial struggles. I'm not qualified to do that. Domestic violence, homelessness, all of the issues that, you know, we'd all like to think weren't happening, but they are happening.
So coming on to that, because obviously I've, over my last few years in this with Magnate Assets and working with different partners and different options for overseas investors, social housing thing has been a big push.
The last
and
3 years.
people setting up offices in the Middle East. I think it's a great high yield. And I think there are some challenges with that in terms of people talk about 25-year leases, they talk about assisted living, they talk about high returns.
Yeah.
But I think from my kind of understanding of this, there's kind of mismatches around property prices and the yield and the percentages and the charities and how that money actually comes. And when you dig underneath, you find that it's not really the government sometimes is paying it, it's subsidised by the charities and trying to get for high rent. But we've spoken over the last couple of weeks and you've kind of revived my kind of interest and faith in this, because I actually think it's a realistic proposition in that somebody's going to pay you to find a house that's proper value, that's a good opportunity, that you can then line up with a charity,
registered provider,
or
a
registered
support provider,
helps people from domestic violence or people moving out of foster care and so on. And then you're basically arranging the leases with them on the terms and agreeing all of that, and then setting that lease not for 25 years but for 3 years, and you can review it and do all of that. And it's the same kind of approach, which is a hands-off approach as well.
It is. It's everything has cause and effect, and the cause of my calling out for support was one particular tenant, and I called out for support with a genuine desire to help this lady. And I was pretty dismayed, and my first calls were met with, "You're only a property manager, it's nothing to do with you." And that was from the government agencies. When I reached out to the private sector, I was told, "Give us the facts and we'll sort this problem out." And I was delighted, quite overwhelmed with the reaction from one particular registered provider and charity. And they did. They helped. They found which gap she'd fallen down and how they were going to close that gap and pull her back to the surface, and they did that. And about a month later, they called me and said, "One of the difficulties we have as providers is housing, because we believe everybody can recover and receive the assistance that they need behind their own front door with that safety, that security. And what we would like to do is work with you, because we've already identified we're not property managers. We're not very good at property management. We're not very good at maintenance. We're not very good at sourcing houses. If you could source properties for us and arrange everything which is around the maintenance, etc., then we will provide the care, but we will take the lease. We will be the leaseholder." So all of the projects that you've just mentioned are all covered by the providers that we work with, but I don't know who's in each property. I don't, it's not anything to do with us. You know, the charity is the tenant, and they care for people in those properties, and they're registered and regulated and Ofsted, etc. But this high yield, yes, it is possible. Yes, it is a comfortable yield because it's at least market rent and in some cases more. But it's not as extreme as the headlines that we see in the social media, I think is probably the safest bet to call it. But long leases, don't work in my experience. And that's because a registered provider is only as safe as the length of the funding that they have. And local authorities don't offer 25-year funding because they don't know whether they'll have that funding. So what they do offer is 3 to 7 year funding, depending on the project, renewable. So the property comes with a renewable contract, and even if that provider loses that commission, the housing need never goes away. So a new provider is brought in and the continuous runs on with the property.
I know that some of the providers, when we've talked before, have been around for 60, 70 years and have a balance sheet of 30-something million pounds or more, so they're pretty safe bets in what they're doing.
And that's the other important thing, is the strength of the covenant. So there's a lot of companies that have been set up fairly recently offering 20, 25-year leases. But these charities and these registered providers have got to be able to show to the charity regulator what would happen if that lease was called in on you all at once. Would it send you into liquidation? And unfortunately it would at 25 years. And we can't afford to put charities at risk like that. So we look at the strength of the covenant, we look at the length of the lease, we match the lease along with the length of the commission that they've received from the local authority. We understand the commission process, we understand the tender process, we work with them constantly. And at the moment we provide housing to 10 charities and registered providers here in the Northeast. And we've been approached by another one recently, and it's an evolution. But I think this sector, due to the lack of social housing, and I don't think the Conservative government or Margaret Thatcher intended in the 1980s for the right to buy to still be continuing nearly 50 years later. I don't think she intended that at all, but consequently it's decimated the social housing stock for the local authorities. And their whole assets, or their asset base, has been sold at a discount. Now, no investment manager would allow that to happen, but it's allowed to continue. And it's only recently that there's been call outs to say, should we stop this now? But the damage is already done. There is now no longer any true social housing available. The waiting lists are longer than lifetimes. And so there's an aspect of vulnerability and people who need support, who are actually in the private sector, leasing properties from private landlords who don't understand what's happening underneath and what's happening in their lives. They just see them as disruptive and damaging and all the rest of it. But if you do seek the assistance of the private registered providers, you can have your buy-to-let portfolio. It becomes relatively passive. There's damage protection in there, there's malicious damage protection, there's everything. So we've wrapped everything around it based on our experience, because before it became fashionable, as you're saying, with the high yields and people setting up offices to promote it, we started in 2018 when nobody was doing it. And, it's very similar to setting up homes or houses when no one was doing it. It's become a very noisy market in the last 3 or 4 years.
So then, interesting for me, the social housing, I think, gets a little bit misrepresented with the high yield. And again, if people are not paying somebody to find that property, I'm always suspicious that where are you making your money? You're not doing this for free. In general areas in which, the property price isn't below market price. They're actually a developer that's doing the work and buying it, selling it, and so on and so forth. So that's great, and to understand it from that point of view. So kind of bringing this all together. So we're thinking about, we've talked about the Northeast and where it was and where it's come to, and the exciting things that are happening there, and what we think in terms of where the market is and what the opportunities are. Like you've discussed, we've said, well, we've got the option that we can go through with the development fund that you've got, which is, going to get good returns, good yields.
It is. Targeted return of 8.2%.
that's on an 8.2% with
Yeah.
no risk. You're not bothered. You're not concerned with
You're not
leases,
involved
houses,
operationally.
you're not
Yeah.
involved
Yeah.
opera. So it's
Yeah.
very much a passive kind of thing in there. In terms of that, and 8.2% is a net yield from
Yeah.
that investment, which is a good yield in terms of that. Or then there's the other route.
Subject, obviously, to anybody's individual tax.
Thank you for pointing
Caveat.
that out. Absolutely, caveat. So, and then you've got the option where, okay, I can think about setting up my own properties and taking a chance on maybe I can
Direct
make more.
ownership.
I've got capital appreciation, I've got, the yield, I've got the rent coming in, I've got it off to a nice provider that's going to give me like a net figure, and I'm de-risking all of the maintenance damage and things like that to get it back as an option in there.
Yeah.
So
there's a number of options. I think the good thing at the moment in this market, and I don't see how this will stop in the next 2 to 3 years. In the Northeast at the moment, the market is still full of anomalies. It's still full of, this.
That was going to be my kind of question from that was, what is the future? What do you think is the future?
Okay.
The next few years.
I think there's an awful lot of people coming into this market now when I have, for the last 13 years, been standing on the rooftop saying, come in, come in, come in. But the people who are actually coming in now are those who are trying to take an opportunity. So they're trying, I receive emails saying, have you got anyone who's selling a property, because I will offer you 70% of its value, but give you a quick sale. So we're in the opportunistic stage at the moment. The answer to that question is always no, obviously, but they're there, and they're in high volume at the moment, and they're all over social media at the moment. But that's because they've discovered the Northeast, and now let's try and get in at a very low value. So my suggestion to everyone at the moment is just hold, don't sell at that point unless you absolutely need to. But what I see happening is that this market is very deep, and it's not closed, but it's very networked, and you need to know a particular street and understand what the history of that street and what has happened in that street, and then you have the anomalies. And the most important anomaly that you can find is, what is the seller's motivation? And unless you have a really close relationship with the agents, and then you get to know the person who's buying and find out what is their motivation, once you've found that out, then there is an opportunity for both of you. And that is that the vendor might just have met the person who is going to make that change to get him out of whatever awful situation he's in at the moment. That can be bereavement, it can be divorce, it can be death, it can be loss of job, it can be redundancy. There can be loads of reasons where people say, I just need to sell. I need to sell. And they need to sell in not an unfair way. So for an example, we have fairly recently, someone was in quite a distressed situation and he did need to sell. And the client that we were sourcing for was able to make him an offer, which was below the market value, but it wasn't so significantly low that it was going to hurt him. And that we actually, I think it was about 5 or 6% below market value for cash. So that's not difficult. But we then also said, after discussion with our client, would you like to stay and just rent the property? And he said, well, yeah, if I could. And we said, okay, during the conveyancing, keep us posted, let us know what's happening with work, with your job search, etc., etc. And he actually found a job. And ironically, he found a job at Nissan. But he found a job, and now he's a tenant. And life's different. So you can't change the world in one day, but you can certainly change one person's world. And that's what the good feeling about.
I find that if I go to the regions in the UK or speak with partners and developers we work with, if I go to Manchester, I can probably offer half a dozen projects, look at this project, and Birmingham and Liverpool and London and things like that. I never really get that when you're in the Northeast. And talking to a few people, and I've done some digging around, what projects have we got? People like to buy off plan, they like their apartment, they like all of this. And it seems that Newcastle is closed and developers have got all of their people tied up. So if I'm going to build this little apartment block, I know Fred over here is going to buy it. It's almost like, what's that word I'm looking for?
And you know why?
Going on.
You've mentioned that to me.
Keeping this a hidden secret.
Yeah, and you've mentioned that to me before, and it's really sort of been in my mind as to why is that. And why is that is because we as a region have always been self-sufficient. We've never had a lot of visitors. We haven't had a lot of investors running over the hill looking to invest in our region. And we've always felt as though we had to encourage people to come in. So therefore, well, can you do it for me, the person next door? Can you do it for me, the developer up the road? And maybe that on a much more macro level comes from that self-sufficiency and the Northeast always being viewed as where you went if absolutely everywhere else was closed. You know, it's not like that anymore. And it hasn't been like that for probably the last decade. It's really, really starting to take off. Now, we could keep it as a secret because I always say to people, it's the best kept secret. And I watched a television program last night where somebody said on there, we're a lovely secret, aren't we? And it really resonated with me because we are. We're a really, really good secret. And, you know, we've got a lot to offer, a lot to offer.
So I think at that point, I think it's a great point actually to bring our chat to an end, which is to summarise this in terms of the Northeast is the UK's best hidden property secret.
It is.
That's there, isn't it? So, I mean, it does bring it to an end. And Jackie, thanks for sharing all your valuable insights into this and the Northeast property market, and for giving our listeners a clear view of clear view of our international investors, especially those based in the Middle East, where you've come from, everything, you know, can confidently, hopefully invest in the UK, you know, with the right support and strategy. And I will take this point as well to everybody. If you are considering building or expanding your UK property portfolio and you want to explore the opportunities available in the Northeast, our team with Magnate Assets is here to help you with every step of the way, and we're partnering with Jackie to build up the awareness around the Northeast and what we're trying to do. So, you know, keep tuned in, guys, for more episodes, and hopefully we can help you with expert guidance. You can also, you know, we're available to book one-to-one. You can visit our website, which is magnateassets.com, or follow us on social media. So please, thank you everybody for listening, and we'll see you next time.